awkward pause. All right, welcome back to another live. I'm your host, Joseph Lewin. And when it comes to finances and financials, a lot of small business owners really think primarily about taxes, bookkeeping, compliance, making sure to keep the IRS off of your back, which, by the way, was a good idea. You should keep the IRS off your back. Don't want to be in that position. But that's not the only thing you can use your financial data for. And in fact, it's really a backward looking way to approach finances, because you're kind of just trying to check and make sure that everything you've done in the past is all squeaky clean, but not making sure that you're able to use that financial data to make better future decisions and better growth decisions. So I'm super excited to have Adam Reynolds on with me today to talk about how you can be looking at your finances to make better business decisions. So Adam, super excited to have you on.
Thank you, Joseph. I appreciate being here, and I'm excited to share some cool stories and hopefully make the accounting world a little bit more fun, because as we were talking kind of before this, if you're not a fan of accounting, I'm a reformed accountant. I'm not a big accounting person either, but there's a way to make it fun and useful.
Yeah, so I think the best place to start is in our pre-conversation, you were talking about 3 different levels of support that business owners need. And most of the time they're really looking at kind of levels 1 and 2 and not level 3, which is kind of thinking like a CFO or getting CFO support. So can you just break down what the 3 levels of support that business owners really need from an accounting standpoint?
Yeah, absolutely. I think it's a simple way of looking at it. Level 1 is just the base tier of getting your data into your accounting system. For most people, that's QuickBooks, and that's bookkeeping. How do you get all of your data entered in there and just plugged in? It's not guaranteed to always be accurate, because in my experience, bookkeepers are just plugging in what they think makes sense. They're not actually going through and reconciling and doing a full month end close to get you good data, which is level 2, where that comes in, aka a controller or senior accountant. They're making sure that you have timely and accurate financial statements. And the bad part about levels 1 and 2 is that just gets you good financial data. That doesn't help you do anything else with it. And when people hire a CPA or an accountant, they're expecting this strategy piece that comes along with it. Okay, well, what do I do with this data? How do I grow and scale using all this information? Where do I even begin to look, and what do I prioritize? But those 2 levels are just reactive. You know, what happened in that data is what happened. You're either happy that you made money, or you're not happy that you lost some money, right? So you can't change that. The data is just the data. And so that 3rd level is where CFO work comes in. And it's, now that I have this data, how do I build plans to grow and scale beyond where I am today? How do I forecast what's going to happen over the next month, 3 months, 6 months, so that I can make decisions today if I think I'm going to be off track? How do I understand what all of my opportunities or pathways are to get from where I am to ultimately what I want to do and grow into with this business? I will say there's kind of like a 4th level, and that you mentioned the tax side a lot. Tax is kind of its own game. It's very compliance focused. And I'll just say a couple quick things about that. You have to make sure your tax planning aligns with your business planning. A lot of times business owners are just trying to save on taxes today. And typically what that means is you got to spend money. And that may or may not make sense depending on what you want to do from a business standpoint. And that's what a CFO can help you understand is, where do I need to spend my money? Because if you need to invest in growth, it could be a good time to spend that. But maybe you need to look good for a bank and show that you're a good borrower and you have financials to support that. But if your tax return just shows, hey, I spent all this money, it might make it more difficult to get funding. And then if you want to grow and scale and make more profit, you might want to save those deductions for future years. And hopefully you do want to grow, make more profit over time, and maybe you go through different tax brackets. But if you use up all of your deductions today, then you're not going to get as much value because they'd be worth more later. So when people just think of things in a tax lens, they're thinking of things in a vacuum. And I think a good strategic CFO can help you come in and look at the bigger picture and say, okay, what does everything mean to me? And sometimes that can be one company. If you're outsourcing accounting, tax, and CFO on one, sometimes it might be a little bit of a piecemeal approach. We do everything in-house. So it's just whatever's finding the best fit for you. But understanding that there are differences to those levels of support, I think, is the first step in identifying what you're currently getting and what you really need.
Yeah. So I want to break this down a little bit for people who are listening and make it applicable to a lot of different size businesses. So first of all, not everybody's in a place, and we'll talk about this a little bit later, but not everybody's in a place where they can hire a CFO for sure. But even, we'll get into fractional CFO and kind of what that means here in a minute. But a lot of people aren't at the point where they can do that. So I'd love to break down the next parts of the conversation really on like how to think like a CFO. Like what are some of the things you're looking at and thinking about? So somebody who's not quite there could maybe start at least thinking in the right direction and use some of their financials as best as they can. And hopefully that helps them to grow to the point where they can afford to bring in somebody who actually knows what they're doing, and get help. And then, then we can get into, okay, if you actually are in a position to hire a CFO, what that means. So let's take it this way. Like, help me understand what a CFO does. Like, what's the role of a CFO in a business? And I think that'll kind of help us level set for the rest of the conversation.
Yeah, absolutely. So I think a CFO is supposed to bridge kind of the strategic and tactical side of all things financial for a business owner. So tactical day-to-day bookkeeping, getting your data into a system so that you have financials to use, all the way to here's where I want to be in 10 years. Here's what I want to sell the business for. How do you make sure that everything's lining up to kind of easily paint the picture of where the business is and what options do you have, what opportunities do you have today to get to that long-term growth point? The best CFOs have a lot of kind of emotional intelligence, hopefully, to drive conversations, because business owners are great at what they do. They don't want to spend very few want to spend so much time digging into the financials and being an accounting and data expert. So ideally, the CFO has the right tools, the right kind of visual metrics to help you quickly understand, yep, here's where I am. That's exactly what I wanted, or maybe that's not what I wanted. What's really causing that? And I think it all starts with good planning. A CFO should be able to help you understand what are all of the leverage points in my business. And usually there's only 1 to 3 things that you need to do really well to drive good profit growth, drive a return on your investment with a CFO, drive a return on your investment with your time as the owner in the business, and help you get set up with the right systems around you to get there.
So then, if we're going to break this down, and I think this would apply whether you're working with a CFO or you're going to try to dig into your data as best as you can for now. What are some of the things that you're looking for? Like, what does it even mean? Because I think that this is a concept that unless you have your MBA or you've worked at a large company and you've worked directly with the CFO, it's hard to even know where to start. It's hard to understand or to have a paradigm for what this looks like. So what are some examples of what you're looking for as a CFO?
Yeah, absolutely. So there's so many generic kind of taglines that I've heard business owners say is, I've grown as much as I can, and I don't know what that next step is to get to the next level. Or I'm doing really great work. I think I'm the best at what I do in the industry, but my bottom line doesn't match that. I'm not making as much money as I think I should. Typically, once you start the business, you're everything, right? You're wearing so many hats as the owner. So you're getting pulled into a million different directions. But at some point, to really scale, you have to build a kind of a middle management or a leadership team to support you. So how do you bring them along and get them bought into your vision and have a clear system or the same language that you're speaking to get to that level of growth? Sometimes if you're looking to grow and scale and prepare for an exit, you want to make sure that your business and your personal lives are aligned in a way that you can make sure you're confident that when you do sell, you're taken care of in that retirement phase. And then one that might be a little bit more scary, but I've heard is there's just absolute chaos going on because we have no systems and processes and everything's just a mess. So I've lived in kind of all those little buckets helping people in the past. And I think one of my favorite stories was one of my first clients, actually. They were a construction client, and they thought they had a plan in place to help them grow and scale. What they really had was just a static budget. They had a bunch of numbers that said, hey, if we hit this revenue goal, we're going to make good money and good profit. So all they did was pay attention to, do we have cash in the bank, and are we hitting our revenue targets? And we met with them about June, so halfway through the year, and they had already lost $250,000. And they had no idea, because they get paid in advance and they pay everybody at the end in their world. And I can remember the conversation. Do you know you're losing $250,000? And they're just like, what do you mean? No, that's not possible. And they said, we have this budget. Our CPA put this together. Like, as long as we hit these revenue numbers, we're good to go. And I said, I would love to see this budget. And it turns out their CPA actually made a formula error in there. Once we corrected that, the bottom line dramatically changed from a good profit to the loss. And I said, actually, it's a pretty accurate budget. When you fix this this formula, it says you're going to lose $250,000, and that's where you are.
Oh, no.
So they said, well, obviously we can't live here. We're going to go out of business if this doesn't work. And so we really outlined what type of work are they doing? How should they price things? How do we manage gross profit and our margin and all the jobs that we're doing? How do we kind of grow, scale, forecast in the right way? And we were able to get them to break even by the end of the year. They made $250,000 the next year, $500,000, million, kept growing until they outgrew us and actually hired an internal CFO. But what I loved about that story is the two owners wanted to figure out how to make this business work for them long-term in their personal lives. They paid off all of their student loan debt, all their personal credit card debt. They started paying people at the top of the marketplace. I mean, that's really important in today's environment, trying to keep good talent. They offered health insurance benefits, 401k matches. They took care of their team, and they were able to take care of themselves in a way they never were before. And that's actually why I came up with the name Thrive CFO, because we helped everybody in that company thrive. And I think so often business owners think it's either take care of my team or take care of myself. There's a way to take care of everybody if you do it the right way. And that's where a lot of these good plans and these good systems can help you make confident decisions around that.
Yeah, it's interesting because I feel like for many business owners that I've interacted with, again, accounting is something that's like annoying and frustrating to deal with. And, it's almost like, it's just, unless you're geared that way, unless you just love spreadsheets, it's very overwhelming. But what you just described is really interesting because it's really marrying together. It's really business operations through a financial lens, right? And so you're really getting into the operational side of the business with how much do you charge, what kinds of jobs should you take on, what even getting into like sales and marketing with, what clients are actually profitable. Like, okay, maybe we've landed this huge client that boosts our revenue numbers massively, but they're not it's not profitable for whatever reason. And so from a sales and marketing lens, like we should probably not be trying to find more clients like that and be finding these smaller or mid-sized clients where we have incredible profit margin on. But unless you're really digging into the financials, you're really kind of guessing at some of those things. And you could build out all of your operations, your SOPs, your marketing, your strategy, your sales strategy to go after clients that you're losing money on. And unless you're really digging in and you layer on that financial lens, then you're not going to get there. So this is a question I wasn't going to ask you ahead of time, but I think this just brought it up. That's interesting. So, I mean, this kind of gives, I think, a little bit more vision for managing your financials and doing bookkeeping more effectively, because without that information being really clear, then it's going to be, what good does it do to bring a CFO in if your data is bad? And I'm sure there's still some things you could do, but for a business owner who's like, okay, I hate bookkeeping, it's a super pain in the butt, but I'm kind of seeing how this could help me for future planning. What are some of the data what's some of the data that you really need to be focusing on tracking if you want to be able to make decisions like this? Like what, I don't know if that question makes sense.
Yeah. Well, one, I wanted to comment on your last response there. I think traditional accounting is reactive and kind of restrictive. It's all past data, and it kind of limits your thinking. Because when you think of a traditional budget, it's like, oh, we got to limit expenses. We can't spend. Whereas if you use data the right way, it's very proactive because you can look ahead and it creates unlimited opportunities. So if you're bummed out by your accounting and you don't think of it as unlimited possibilities, you gotta partner with the right person to help change that mindset. But to your point about what data to track, one, you got to make sure your balance sheet is accurate. That's very technical. If you have a bookkeeper, talk to them. Is everything reconciled? Because if your balance sheet is accurate, then your income statement at least has the right net income number. But two, I would make sure, one, you understand what your break even is. So how much revenue do I need to generate to cover all of my costs? Make sure that I'm covering my payroll, I'm keeping the lights on. What is that number for me so that I know, if I don't hit that, do I have a line of credit in place? Can I use cash reserves to keep bill payments up? Or what am I going to do from the sales marketing side to grow past that? Or do I actually need to look at cutting expenses because I'm overspending? So if you understand that first, I think that's a good starting point. And I would pair that with, what is my gross profit margin? So you mentioned so many businesses probably have bad data. I would say 90 to 95% of business owners do not have accurate data. It's a crazy truth. Even if you work with a CPA or an accounting firm, it's scary to see how bad it can be out there. So a lot of people just use the generic chart of accounts that QuickBooks gives you, or whatever system you use, where it just has your revenue and a laundry list of expenses. But if you really understand what it costs to generate that revenue, what do I have to pay my team to do the work? Do I have different software that's directly related to our customers? Am I in manufacturing or retail and there's product costs with that? Your revenue less what it costs to produce those goods or services gives you a gross profit margin. And that number is the most important number, I think, on your income statement, because that will tell you how many goods and services do I need to provide to break even and then ultimately drive the profit that I want. Everything above and beyond, because if your expenses are kind of flat, anything above and beyond that on gross profit falls straight to the bottom line. That's one of your biggest levers to pull, and you should know that number inside and out.
Yeah, and it's kind of interesting because so often people focus on revenue, and revenue doesn't really matter that much. I mean, I'm not saying it doesn't matter, but like your profit is way more important than your revenue at the end of the day if you're a business owner, because you could be doing twice as much revenue and making half as much profit and doing twice as much work or 4 times as much work to do that.
Absolutely. I always say in golf terms, revenue is like the drive for show and profit's the putt for dough, if you ever heard of that. So revenue is like a vanity metric. Stay away from that.
Yeah. And I mean, obviously, like if your profit margins are great and you're making more revenue and your profit's going up, then cool. Then we're in business, then revenue means something. But a lot of times people are growing their revenue and their profit margins are getting worse and worse. And to your point, they could be looking at it and going, oh my gosh, this is our best year ever. And they're losing $500,000. And you're like, maybe we should take a little bit closer look at that. So I think that's a huge reframe. And it's also like, as a smaller businesses, I found that people have this mindset, either revenue growth or employee growth. And those are two things that people look at and they're like, oh, this means that I have a successful business. But again, like you could hire a team and have this huge team, and every time you're hiring, it could be actually hurting your ability to actually grow how you want to in the long run if you're not really planning for it. And sometimes you have to have less profit for a portion of time as you hire in more people to get to that next stage of growth. Mm-hmm. But that's done with planning and intention, not just going, oh, I want to hire more people and say that now I have 30 people who work for me or whatever, because that can lead you to a place where you go from 30 people working for you to 0 people working for you because you don't have the money to pay anybody. And that can end really poorly really quickly if you don't have the right planning in place. So
yeah, and I found that if you break things down into the simplest like common denominator, that really helps people think through that planning process. Whether you're $1 million, 5 million, 10 million, whatever it is, if you break it down to how many projects does that mean I have to perform? How many recurring revenue clients does that mean I need to have? How many products do I need to sell at what price? If you think about it that way, it's so much easier to kind of say, is that reasonable? Is that achievable? Is that realistic? Than just saying, I'm going to be $1 million, $5 million. What does that really mean?
Yeah.
If you can really say, okay, I need to have 10 clients that pay me X dollars per month. Can I do that? That might seem more realistic and achievable for people.
Yeah. Yeah. I love that. Yeah, so to kind of round out here, I want to talk about a couple terms that I think can get a little bit confusing. We broke down CFO, but then you're a fractional CFO, and some people know what that means, but other people have absolutely no idea what a
Mm.
fractional CFO is. And so, typically having a CFO is relegated to fairly large companies. You got to have a lot of revenue to support somebody who needs to make what a CFO makes, and then that's where you're getting that strategic help. But when you have a fractional CFO like what you do, it makes that same level of strategy available to people at a much, lower cost. And so, could you share a little bit about what it means to be a fractional CFO?
Yeah, absolutely. I think there's probably a couple different types of fractional CFOs depending on what you need. The two main types that I see are ones that are more project focused, come in and try and help you solve an immediate pain. They might work with you for a month, a quarter, 6 months to solve one problem. And that is very much so more tactical. And I would say be careful with that because a lot of times they get too into the weeds and you're paying a CFO level rate for more of your kind of accounting level. So that's a slippery
Mhm.
slope if you work with that type of CFO, in my opinion. And the second type is more where we live, and it's more of that strategic level CFO. So from a fractional standpoint, it just means you're not getting a full-time person, right? You're a fraction of the work at a fraction of the cost. You're getting ideally just the key things you need to help drive things forward. What we do, one, we start with the not so fun or sexy thing. We go in and make sure we have good data. As we alluded to earlier, you have to have good data to have good conversations to make good decisions.
Yeah.
Once we have that, we dive right into our planning process. And that's really understanding what are all the growth opportunities that you have. And I'll talk a little bit more about what that looks like as kind of a takeaway later. Um, but what are all those opportunities? How do we really boil down the top 1 to 3 things that we have to do really well that are then the foundation for our budget or our plan for the rest of the year, next year, whatever time frame we're looking at? And then we go through and build that detailed line by line plan and break it down and say, what does that really mean? How many jobs, projects, goods, whatever that is, what does it actually take to achieve that? And what does our profit look like? And is that the profit level that we want and need personally?
Okay.
Once you build all those tools out and combine that with like dashboard visual metrics, up is good, down's bad typically, then you can say, okay, we have the framework. Let's actually identify how to use this. Let's have a monthly meeting where we walk through the results. Here's what happened the past month. Is it what we expected? Great if it is. If it's not, what happened and what were the differences? Sometimes you might have to dig into it outside of that meeting a little bit more, but hopefully you know what it is going into that meeting. But more importantly, the better side of that meeting is what's happening in the next month, 3 months, 6 months. How are we forecasting? What things can we expect? What may come up that's unexpected? How do we make sure that we're going to stay on track? Because we can make decisions today to change our results in 3 months and 6 months. You don't have that opportunity with the retroactive bookkeeping. So that's where you should spend a lot of your time is really understand, okay, if this is what's working, let's double down on that and expect and forecast the results from that. If we know things aren't working, what are we changing today and what are those expected results? And if you do that with a fractional CFO, then that's going to improve your opportunity to drive a return on investment. Make sure that your profit is growing at the rate that it should be. A good CFO, a good fractional CFO should pay for themselves just by helping you not avoid opportunity costs of missing a good decision, or by hopefully reducing the amount of bad decisions that we can make. I do want to say they're not going to get it right every single time, right? We got the best data available, but if you can kind of course correct quickly, then you can get
Absolutely.
back on track.
Absolutely. Yeah. So then I'd like to kind of round out here with um, when somebody should bring in a fractional CFO. Like at what stage does that make sense versus, just doing your best to kind of dig in and use your data as best as you can until you can afford to bring somebody in.
Yeah, I would say it definitely depend. It definitely depends from a revenue standpoint. I always kind of use the guardrails 1 million to 20 million. 1 million, you've kind of grown the business enough to where the business is more. It needs to be more than just you to kind of grow and scale past that point. You have to build the right team. You can only do so much. You only have so much time, energy, and money to invest in the business. So really building out what that team looks like, a fractional CFO can help a lot there. And then once you get to 20 million, you might be able to use fractional CFO a little bit longer, but at some point you've got to get an in-house person because you just need so much more at that level for that size business. I say that those revenue ranges are more important too, just because it is an investment, right? You're taking what is normally maybe even a necessary evil, right? In terms of accounting and tax, I have to spend money to be compliant. And you're saying, now I need to spend more money. Well, we have to drive a return on investment. It is an investment opportunity to drive better value in your business. But at a bigger size, small percent growth changes fall straight to the bottom line. And if you're $1 million plus, bigger numbers fall to the bottom line with just small changes and improvements. So
absolutely.
But I think it goes back to
you tweak something and get a 10% difference on $100,000 business, and that's really only going to do so much for you. Whereas if you're a $10 million difference and you do something that makes a 10% change, that's going to be massive impact on the business and the bottom line. So,
and that's what I think you need to, when you're exploring what a fractional CFO looks like, you need to ask the CFO, what is your process and what kind of conversations are we going to have during this process? Because I always do my due diligence during my kind of sales and onboarding process to make sure that, one, can I actually help this business owner? Can I help them grow and scale? Is this process a good fit? It's my reputation at the end of the day. I don't want to ruin that. I want to make sure I'm doing good work for good people.
Yeah.
But unfortunately, I think there's a lot of companies out there that will just take work because they think they can take work and hope it all works out.
Yeah.
And so many people don't have a process. So ask them what their process is as you're shopping to see if you can find that good fit, because they should help you identify, here's all of your growth opportunities. Here's the conversations we're going to have. If you're planning for an exit, what's that roadmap to look like for the next 3 years? How are we going to use this process to drive value in the business? How do we get a management team or a leadership team on board with using data the right way? Like, all those should be conversations that you should have up front before you pick the right one.
Love it, man. Yeah, I mean, you definitely, from our previous conversation, this one definitely helped me to kind of reframe thinking about accountants and maybe having a slightly less negative point of view on dealing with compliance and financials and all that side of things, because it's not my favorite thing to do, digging into spreadsheets and stuff. So really appreciate your insight on really thinking more forward thinking with an accountant, with a CFO who's able to really dig into your business, and getting into the operational and growth sides of the business is huge, right? And that's where you can actually make money. So I think even reframing it from being just purely a cost center to a revenue driver, if you do it the right way, you bring somebody in to help with that. So really appreciate you sharing that and helping to reframe that. So where can people find out a little bit more about you and how to work with you?
Yeah, you can connect with me on LinkedIn, Adam Reynolds, Thrive CFO. You can also email me at adam@letsthrivecfo.com. And then our website is letsthrivecfo.com. There's a contact form on there, whatever's easiest for you. Even if I'm not the right fit or it's not the right time, I love just having good conversations with people, because usually I can hopefully leave them with something to take away and say, oh, I haven't thought about it that way. Or if I'm not ready to purchase yet, but if I can focus on these couple of things, then I think I might be ready in a year or two, right? So I'm just here to help people and happy to have those conversations.
Awesome. Well, thanks again. Really appreciate it, Adam. And everybody listening in, we'll see you on the next live.